Hi there, this is Kritesh and welcome to TradeBen's YouTube channel. In this video, we are going to discuss about coffee can investing. But first of all, if you are new to this channel, please subscribe. We publish new interesting investing and trading videos every week. Suppose you have a very precious metal which is not valued much currently. So you keep it in a box and you hide the box for some time. Let's say after 20 years you find that box again, and at that time the value of that precious metal has become 20, 30 times or even 100 times. The same is the concept of coffee can investing. In coffee can investing, what investors used to do is they hide the share certificates in coffee cans or simply a can, and in order to keep that box safe, they hide it somewhere else. Later, they generally forget about that share, and eventually, when they find the shares again after 20 or 30 years, they came to know that the value of that shares has gone exponentially high and it has given them 10 times, 20 times, or even more returns. So, this is the basic concept of coffee can investing. In other words, it means buying and holding. And here, the investors do not sell the stocks for a very long time. Now, the concept of coffee can investing was first discovered by Robert G. Kirby in his paper written in 1984. If you want to read his paper, I will add a link in the description. You can download the ebook and you can read it. So basically, he came up with this idea. Now, let's understand the story behind the coffee can investing. So, once a woman visited Robert Kirby in order to inherit the stocks which her husband invested in account of her. So her husband was a client of Robert Kirby and he used to take the recommendation from him only. However, there was one difference. He only took the buy calls and he never took the sell calls, which means that he used to just buy the stocks but he never sold that stocks. So while looking at the portfolio, he found that the value of those investment has gone way higher and has performed way better compared to what his portfolio was doing, and that's how he came to know about coffee can investing. So here his husband was just buying the stocks and not selling and just simply ignoring the sell recommendation, and just because he was holding the stocks for a very long term, he was able to generate a very good return on his investments. So this was basically the concept of coffee can investing. Now let's look at few of the benefits of coffee can investing. First, it has very minimum expenses. So when you are not selling your stocks or when you are not doing frequent transactions, you do not have to pay brokerage charge, any other transaction charge, or even you do not have to pay taxes. You have to pay taxes only when you sell those stocks. So here, just by buying the stocks and holding for a long term, you will be able to minimize your expenses. Second, here the investors do not need to track their portfolio. As this approach follows a long-term investment, the investor has the flexibility to not track their portfolio as frequent compared to active traders or even active investors. Third, it's not affected by volatility. So short-term market fluctuation or short-term bear market doesn't affect the investments of the investors here. And finally, because this is a long-term investment, generally the in returns for these stocks are way better compared to day trading or compared to short-term investments. So now that you have understood the concept of coffee can investing, let's see how you as an investor can follow this approach. So basically there are three things that you need to follow while doing a coffee can investing. First, your time horizon should be longer. You need to stay invested for at least 10 years when you are investing using coffee can strategy. Second, here you need to invest in generally mid-cap stocks. The large cap companies are already mature, and even if you hold those stocks for 10 to 15 years, it might not give you that good returns. And if you look into small caps, they are very risky and they are volatile, and the chances of those companies going out of business, delisting, or even going bankrupt is way higher compared to mid-cap stock. So mid-cap stocks, they have a potential to become a large cap company in future, and these stocks are the best suited for coffee can investing. Third and final, you need to look into companies with a longer vision. The companies should be in business for next 15 to 20 years and their products or services should not become obsolete with time. The company's products and services should be viable for a long term. And here, while picking stocks or companies, you need to look for the longer vision. So these are the three things that you definitely need to look while doing coffee can investing. First, your time horizon should be longer, at least 10 years. Second, if you invest in mid-cap stocks, they have the best potential to give you better returns. And finally, you should have a longer vision of the company and their products while investing for the long term. So that's all for this video. I hope it was useful to you. If you liked it, please hit the like button and do comment below what you think about coffee can investing strategy. This is Kritesh signing off.